Really for trading or investing. If you have money, first go for house, get some insurance, go for some fixed deposits, save yourself first. After that, 5-10% of your total net worth, if you invest in stock markets, it's okay. But if you are an investor, you are okay. If you think by buying in the morning and selling in the afternoon is called investment, it is not. Although Tamanna might try hard to do the stop loss stuff and all, please don't even get involved. And even if I try, and I'm considered a person who brought derivatives, but it's a very sophisticated instrument. It's not for retail investors. Please don't ever come to this derivatives market if you don't understand it.
You've given me the perfect cue to what I wanted to ask you. Derivatives market, the regulator is going hammer and tongs. You have a very large brokerage player who's saying that their revenues from this space has gone down 40%. What is it looking like for the National Stock Exchange? Are you seeing some of that action drying up?
No, we are. Of course, even when the new regulations were coming up, we had said that this is going to affect revenues by 40 to 60%, and people were not believing. I think even on your channel, there are recordings which say that's not going to affect. But we know, and there are cycles. So what happens is the cycle actually matched with the new regulations coming in play last year, and the market slowed down. At the same time, the new regulations on derivatives both came together. In case they had not synchronized, probably the fall in the revenues would have been much lesser if the markets were going up even further. Then you would have seen some inflow even in derivatives at that time. But since the markets also didn't give great returns in last 1 year, and also the new derivatives regulations came, you saw the interest going down. So at some point in peak, I think January, February, probably 24, we were running 30-40 lakh people trading every month in derivatives. Now probably 20-22 lakhs in that range are trading in derivatives. So you can see even the number of people trading in derivatives are coming down and things like that, the unique investors.
But you do have now, you're planning new options for daily expiry, but for foreign investors?
No, it's again, the GIFT City market is for the foreigners or for the sophisticated people. So that's a different market. It's not the same market. And there, for the knowledge of the viewers, that market has options available even for monthly. Nobody trades monthly options there also, neither weekly, because that market does not have STT. And that market trades only futures for last 25 years. When it was in Singapore, when it is in GIFT City for last 3 years. Why? Is because India has a huge differential on a notional basis between the STT applicable to the futures versus options. That is, the options is charged on premium and futures are charged on notional. That's where there is an arbitrage, as I call it, tax arbitrage. That's why the Indian market from 2008 started going more towards options premium. 2004, when the STT was employed, that time the options premium plus the notional were charged the STT, and futures were charged on notional. So both had equivalent. That time, 2004 to 2008, there was no difference in terms of the trading volume in notional basis between options and futures. As soon as you went on premium charge, it took off. And now, at the same time, if you look at the other way around, that the notional traded, that what is actual value traded in options is even now probably 1/4 or 1/5 of futures, even in the local markets. And that's why many times we make up things on notional basis. Many times we make up things on premium basis.